Today we learn income under the head salary, and this income under the head salary we learn from accountant perspective. So as a accountant, what we need to know for income under the head salary? This income under the head salary, the detailed computation is provided under section 15 to section 17 of the Income Tax Act. Now, what is called the salary? Salary means that any income which arises out of employer-employee relationship. Any income arises out of employer-employee relationship is classifiable under the head income from salary. So what is in between employer and employee? There is a contract. This is a contract. We got the appointment letter. Appointment letter means the contract. Before issue of appointment letter, employer issue a offer letter. In that offer letter, employer mentioned that what are the terms and conditions of your job, how much you will get. So once you are accepted that offer letter, then it will become a contract, and on the basis of your acceptance, employer will issue a appointment letter. Now sometimes at the time of issue of offer letter, before joining, employer says that okay, if you join, then we'll give you the join bonus. We'll give you the join bonus. Now question arises whether that join bonus will be income under the head salary, because we have learned that salary means that any income arises out of employer-employee relationship. But this joint bonus we have got before joining. So whether it will be classifiable under the head salary, that's the one debatable issue. We are not going into the details of it, but as an accountant, you also knows that there is a concept of joint bonus at the time of offer letter. Now the second is that after joining. So when you join, that means you have already got the appointment letter. So your contract is signed, contract between employer and employee is signing, and whatever the employer will provide you, that is basically cost to the employer, which is known as the cost to the company. So for hiring an employee, employer incurred a cost which is known as the cost to the company. This cost to the company has basically the two components. One is that monetary component, another is the non-monetary component. This monetary component is normally comes in the pay slip. So as an accountant, you also required to do the payroll processing. So this pay slip is very important to an accountant to do the payroll processings and also to identify the tax liability after doing the computation of income under the head salary. So in the pay slip, we will find basically there are two components. One is the basic salary, another is the allowance. From this basic salary and allowance, there may be a deduction on account of provident fund, there may be a deduction on account of profession tax, there may be deduction on account of loan. If employee has taken any loan, that may be reimbursed, that may be repaid monthly basis, which is reflected in your pay slip, and there will be a TDS component. So whatever the tax is required to be deducted from the salary, that is also deducted. So from that, after deduction, we will get the net pay. This net pay amount is the check which will be issued to the employee or which will be credited to the employee's bank account. So that is the after joining during employment period. This is the one area where accountant needs to work. Now on resignation or on retirement, as per this contract, the employee is also entitled either for notice pay or for gratuity, PF, leave encashment, all sort of benefit may be available to the employee as per the appointment letter, which is a contract. So what is the tax implication of that? That will also come under the head income, under the head salary. Now come to the non-monetary component. Under the non-monetary component, which is known as the perquisites. Some perquisites are taxable, some perquisites are not taxable. So being an accountant, you also need to know that which perquisite is taxable and which is not taxable. Because taxable perquisite you need to consider for computation of income under the head salary, so that accordingly you can identify a tax liability of the employee, which you can deduct from their every month from their salary sheet. So this taxable perquisite is basically rent-free accommodation. Sometimes employer provide the accommodation for which employer is not taking any rent. Sometimes free gas, electricity is also provided to the employee. Sometimes personal use के लिए company can provide the car. So these are the certain examples of the taxable perquisites. So you need to read the contract to find it out. What are the taxable perquisites? Non-monetary. Because since it is non-monetary, it will have no reflection on the bank account. But it has an impact on computation of income under the head salary and accordingly the tax liability, which as an employer you need to deduct from the salary of the employee. Then there are some non-taxable perquisites. So there may be some perquisite which is partly taxable or partly exempted or fully exempted. As for example, there is a medical expenses reimbursement. To some extent it is not taxable. Then training facilities provided to the employee, that is fully exempted. Then telephone, laptops given to the employee for official purpose. Any benefits provided to the employees for official purpose, these may be the perquisite, but it is totally tax free. Then food beverage. So there is certain limit of food beverage. Up to that there will be no tax. Beyond that, that will be taxable. So which is taxable, which is not taxable, that as an accountant you need to know to find out the TDS liability, because it is a statutory liability. If your computation under the head income from salary is not correct, then your TDS computation will also be wrong. Now on resignations or retirement, these are the benefits may be provided to the employee as per the contract, and it has some tax implications because some benefits fully exempted, some is partly exempted, right? So there are some ceiling of exemptions. So when the final settlement will take for any employee, accountant should be very careful at the time of computation of final settlement to identify what is the tax amount, and on that basis they need to deduct the tax before release of final settlement check. Okay, so as an accountant you need to keep all these things in your mind.